Hey guys, how are you doing? Yep, this is PAA, Plains All American Pipeline. This is a follow-up of a closure of a particular trade that attained its goal. We gave you this trade and said it was that we'd been short, in fact, from 25 and north of 25 with other entries in around the 24s and a half, and that in actual fact we were looking for 319 as the eventual goal for this particular trade. Whoops, it slipped a little bit out of alignment with my jaw there. And I just wanted to illustrate that at the only screenshot I took of one of the entries was on one of three platforms that I was expressing it. I think it was around, let's have a little look, 24 for a peppercorn amount, 24 and a half there through to the 3.3s limit. So that is illustration of entry. The stop is just above there, and this is an incredibly strong risk reward. So if you're in at 24.50, you're getting a 30.9. Can I also mention that entries were taken on other platforms which weren't screenshotted or anything. I don't mind if people accept what we're doing or not. We went public round about here after all our premium community was in. And I just want to make a small illustration too. If you got in on a second chance, say at 1934, where I'm putting this red arrow right now, let's say you grab that there, so that's around 19.34. That's it there on the column on the right hand side. That's a good trade to go down to 319. However, if you'd got at short at 24.50 or 25.03, as some of us had as on our very best offers, you've done 30.9 risk reward at 24.50. And just to illustrate this concept a little further, I'm going to draw for you here. If you'd got in a little higher, we're going to select that risk reward and move it up to 25.03. And it starts to get quite ridiculous. Let's leave it at 25. It's so tight to stop. That's 24.84. That's 25.01. I'm not even going to try and get 25.03. It's going to go up to about 145. I managed to get it previously if I expand this chart a little bit further. When last did you get 100 plus risk reward in your trading? You've got to ask. When last did you get 30.9 at 24.50 in your trading? We've essentially called, there we go, that's 25.05, that's 156 RRR. So depending on your entries, this was the second touch at this level. We had already looked and entered. You might notice that I took a look, and I'm going to remove those lines now because they're no longer aligned. I don't want to use the trading view lines, so just clear the screen there. Clear the screen. Doesn't want to clear the screen now. It's lovely, these add-on apps. So we actually had a rising wedge up top here that went to 25, the upper 25s. You can see it here with me. And we were getting engaged in this trade already. This is what I mean by having the ability to get early over there. You can see that the high there was 25.27. I would show you that that high is within 1 cent, I think it was, 25.26. That was double top heaven, yes, at 27. After the rising wedge, we took the first break of the rising wedges for a number of them. That's why the 24 and a halves, and we got short higher up the second time round with a come and get me stop. You know, you're almost there, come and get me. The benefit of that is you rising wedge again. This time it was for real, so we were expecting that. How did we have such level of confidence to stand in front of a steamroller with only half a meter to go and expecting it to not make us on that half meter, and then to go 156 meters in the opposite direction for that extent of risk reward? It's confidence in a method and expecting a certain outcome. It's 360-degree analysis across oil, all the other equities, including tallow oil, which I'll do a separate video on following this. It is understanding that risk reward trading is the real power, and that actually the chances of being accurate, instead of being 1 in 156, were significantly higher. Well, we just landed that 1 in 156. That was the risk reward. Do you think in my mind I only thought I had 1 in 156 chance of doing that? We have a community of people that have all landed this trade. A 25.03 entry with a 25.27 stop. That took you to $3.19. Ironically, there is still scope if oil sells off for this to trade even lower still. It is possible, but we're happy with what we've got and what we've achieved. And this was given to you. So for many of you, most people, when I look over their shoulders at what they're doing on trading, they think they're trading 1:2. And then you look at their P&Ls, they have a load of losses that they're letting run. Instead of taking 1 unit of loss, they're taking 1.5, 1.8, sometimes 2, letting things slip. And they said, oh, that happened because of XYZ. It's not typical of what I do, but it's your facts. It's what's your outcome. Very few even get 2.75. That's what you could have got when we gave you the just-in-time entry. In fact, I think we mentioned it even before it triggered on the just-in-time. Of course, you're not getting 150. You're not getting 31 risk reward, but you're getting 2.75. You're getting 2.75. It came nicely for a second chance to a level we provided you at 1934 and traded all the way down to 319. And may I suggest it's even possible that given the nature of the break, you could have drawn your stop down a little bit and improvised a small amount, say just to above that technical rally point over here. Let's see if we've got our drawing tool back and if it's playing the game. Over here, so you could have done stop there, boom 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 bosh, that little point, and taken the second chance entry there. That, in terms of risk reward, would still be better than most typical traders are attaining. But what about the 100? What about the 31, the 30.9? Wouldn't you think that would be worthwhile having? You could have been earlier. That's the value of community. That's the value of 360-degree analysis across all the underlying commodities in other oil services companies that we saw a commiserate risk, that we could, in essence, understand that there was industry-wide risk and specific risk to this particular equity, that it would lose 87.25. Let me just say, while I did this, I'm forced out of curiosity to go and do Google searches on this. And the amount of Motley Fool articles and other investment articles regaling what an incredible buy at a retail level Plains All-American was at $19, at $17, at $22, and what a dividend yielder it is at 6%, 7%, 8%. Well, it's an even bigger percentage dividend yielder now, guys. At $3, at $3.19, that dividend absolutely moon. But you think that dividend's going to keep coming with oil in the state that it is now? That dividend granny share, being punted as a granny share for pensioners, just lost 87.25% of its capital value. If you were a granny and you put in $1 million for your entire life savings in there for your 6% that you were initially getting, that $1 million would have lost 87.25. That's right, 872,500. You'd be sitting with barely 125 grand left, and you still will probably lose your dividend yield. That's the value of real method and not buying the fantasies and 360-degree analysis. This trade was made on YouTube and mentioned and updated a number of times, and I'm doing just a post-mortem conclusion for this particular aspect. This is the value of HVF method, or it's the cost of not having it. Or it's the cost of not having it. It's the difference between a very good 4.61 on a free view and 100 risk reward. How much better off are you at 100 or 31 instead of 4.61 at 24.5 on the break of the falling wedge up top here, where you have the real sense of commitment to a trade? And how do you get that? You've got to understand, learn, and have confidence in a method. You've got to have a community which is watching your back and making sure you don't get yourself drunk into a certain frame of thinking, and you've got to do broad industry research. That's what the HVF method, technical analysis, is all about, and you've just witnessed one of many examples where this has occurred. Okay, hope you enjoyed the video and the update, and you know what to do. The links are below. There's free stuff, there's paid stuff, and you can do whatever you feel is right. But when you feel ready for big risk reward trading that actually comes off every now and then, you know what to do. Okay, thanks for watching, and I hope you enjoyed, and let me know in the comments if you're one of the free view guys and you took that trade, and follow us. Might be worth your while every now and then. We do try to put things out to help people develop their trading so they can get into the community on a trade, on the Market Sniper, the Crypto Sniper for crypto, and the Reset Sniper, and of course this YouTube. Sub and share, we value that. That's how you can say thank you. All the best, guys.